Trade Network contributor Jenny Horn to the show here. Jenny, this is a fun topic, and one that is very interesting is this is a space that has taken on extraordinary kind of adoption over the last year, and we try to assess where things have kind of fallen and where they stand. We're going to do a fun comparison of a bunch of these different companies in the food delivery space, so take it away.
Yes, I mean, I would say that Grubhub, DoorDash, Uber Eats, they're all sort of pure pandemic plays because they saw sort of this heightened demand as so many restaurants were closed, or here in Chicago, we were eating outside in like our winter coats. So suddenly food delivery seemed like a pretty reasonable option given some of these fees. It seemed a lot better than sitting outside and freezing. So DoorDash, I mean, was a name that just recently went public December of 2020. And so many investors gave it so much flack when it was debuted and sort of said, this is one of these overhyped IPOs. You know, it was one of the biggest IPOs of 2020. However, I think they've sort of proven some people wrong here. Their revenue surged by over 3 times over the last year to $2.9 billion. And there were these concerns that these companies' sort of business models would crumble as the economy reopens. But for DoorDash specifically, on their first quarter earnings call, they actually upped their guidance for their gross order volume for the year to be between about 35 to 38 billion, which would represent about 55% annual growth, which is the high end of its guidance range. So this gives, I think, many investors faith for this sort of group of names as a whole, that maybe we won't see as much of a slowdown as some initially anticipated. However, the biggest headwind for all 3 of these names still remains to be profitability. I mean, so we see margins consistently flat for some of these companies. In DoorDash, they actually sank about 2% during the first quarter. And a lot of this is just due to the fact that increased demand for some of these meal delivery services translate into increased rise of labor costs for these drivers and these delivery partners. As we've seen, you know, there's sort of this joke going around where Ubers right now are so expensive just because we're having this issue with labor demand. So another thing that I thought was interesting with DoorDash is they announced actually new pricing plans for their restaurant in early May. And there are 3 different tiers, starting at 15%, then 25%, then 30%. Now the 15% tier, the lowest tier, offers, you know, the smaller delivery radius, but it puts more of the fees back on the customers. The larger option, the 30% tier, actually gives less fees for its customers and a wider delivery radius. So I thought that's interesting because the economics of sort of all 3 of these names remain very difficult. You cannot keep fees low for both your restaurants and your customers simultaneously. So that does raise the concern that given the fact that this was objectively one of the best years these companies have ever had, just due to the fact that we were sort of living in an unprecedented year, the fact that they were not profitable in what would have been one of their best years marks the question, will they ever be profitable? So I think there is that concern. And right now it seems like there's a lack of loyalty to sort of one. I typically just go on and try to find whatever will be the cheapest because fees right now for these names are absolutely ridiculous. Which brings me to our first tweet today, which I can totally relate to. Our first tweeter says, DoorDash, the meal, $8.34. The total, $29.23. And this is so true. If anyone's ever ordered delivery recently, I feel like it's worse than ever, I think just due to the lack of labor, like I mentioned. But this is a huge problem because now all of a sudden, your $8 meal, it seems completely unreasonable to get it delivered. So I've just had friends that say, we won't do delivery anymore, which is, I think, a problem, obviously, for these companies. And our next tweet sort of focuses on, you know, their degree of profitability and what they can really do going forward, which says, Airbnb, Uber, and DoorDash had to be both cheap and convenient at launch to attract customers. As they've now disrupted incumbents, they can afford to raise prices because we're hooked on the experience. This is also Amazon's long game, which is so long it might outlive us all. So actually, I don't know if I agree with this tweeter at this point in time because, like I mentioned, Uber is rocketing their prices. DoorDash is seeing crazy fees. And all of a sudden, it's making me say, wait a second, it would be cheaper for me to just go to the grocery store, not have my meal delivered. It would be cheaper for me to say not take an Uber. So I think that actually these businesses right now, it's not necessarily working for them because say DoorDash has really, really high fees, I think a consumer will just go to Uber Eats or just go to Grubhub. I don't think that they have this pricing power quite yet that this tweeter is talking about, Kevin.
Jenny, I think that this sector of the economy is in complete disarray because of the lack of drivers and enhanced unemployment and everything happening with this current economy. Go no further than to look right here. And the fact that they're trying desperately to give drivers incentives to come back from the sidelines. But how do you incentivize someone to work when they're very possibly making more money not working? So I think, you know, the rumors and the people displaying the fact that Ubers are so much unbelievably expensive right now, and I had one. I took an Uber from O'Hare on a snowy day in February, and it was ridiculous how much it cost. So I think this market, as we sit right now, I don't know how it's going to play out, because you're right, Jenny. None of these companies are profitable, and something's got to give with this whole sector. It's in disarray, that's for sure, guys.
Yeah, and Kevin, in many ways, the traditional cab service is cheaper from the airports in some cases too. So you have seen things almost come full circle there. And Jenny, to the tweet's point about kind of the pricing slowly coming up, I mean, it has come up over the last 3-4 years. It's really obvious now, but it's almost like Netflix. Netflix has slowly raised their prices very, very subtly over time, and Uber has done the same. And so what was once a $3-4 ride is, you know, $10.50 now. So it's very interesting to watch, but there's still more to break down as the comparison between these companies within the space. So Jenny, great setup here for us. But I want to welcome in the co-founder of LikeFolio.com, Andy Swan. Andy, I did an embarrassing amount of market research last week when I was home alone and, you know, being lazy, and decided that, you know, maybe I should just order some food. And so what I will say is, I'm not going to say which one. I was a little bit disappointed with one of the company's services, and I stopped using that one. I switched to another one, and to me, it made me think: is this a fickle industry? Does one bad experience just make you write off a company altogether? Is that something you see at all when you're analyzing some of these social media posts?
Yeah, we see it a little bit. There's certainly a lot of fluctuation in which of the providers is the most popular. And it has been DoorDash recently that's really been the big winner. Big increase in market share. So a year ago, DoorDash accounted for 45% of purchase intent mentions that LikeFolio tracks in this space. And this year, right now, they're at 60%, nearly 60% in terms of market share versus Uber Eats, versus Postmates, versus Grubhub. It's just a really sizable slice of the pie, as you can see on that chart there. And so DoorDash definitely has picked up a lot of steam. Now, the overall food delivery market, you know, we're seeing, of course, there was this massive new user adoption in 2020 as we got into the pandemic through the summer. But now we're seeing that overall adoption really come down to pretty normal levels. You know, we've got something that I would say, you know, these are definitely show some stickiness, but not rapid growth. We see generic food delivery mentions have fallen 20% quarter over quarter, and are really only 11% higher than this same time in 2019. And so all of that happened in 2020 in terms of bringing new users into this space, and you're only 11% higher versus 2019, you know, that's definitely concerning, I think, for the industry. I think there's a natural baseline of food delivery that we're getting back to. And, you know, the pie isn't increasing as much as it used to. So now it's about who wins. And I think it's really a two-horse race between Uber and DoorDash at this point.
Andy, this is a tricky sector to talk about right now because of, I think, what the disarray is, and people reporting abnormally high prices and people reporting long waits. And is there a division between food delivery and human being delivery? Is that because the numbers that you're putting up for DoorDash, the numbers you're putting up for delivery show real growth and real excellent numbers. But all we hear in social media and through voice of, word of mouth is how horrible this Uber, people delivery experience is. So is there like a division between these two because one's doing really well and the other one is not engaging? What sense are you getting from your data on the overall state of this industry?
Yeah, I think there's a massive disruption in this, and I think that really it's about what the drivers want to do, and the drivers want to take objects from point A to point B rather than people, because objects normally don't create a mess in your car. They aren't abusive or abrasive. And there's just not the risk that you have. And so we see that with DoorDash. They're really expanding. They're getting into key partnerships with Walgreens, Rite Aid, even Macy's and others. And it's really about, becoming a delivery of objects company, whereas Uber has, it started the other way. And I don't even want to talk about Lyft because they must be in some serious trouble. But yeah, I think that's the biggest problem is you've got very few drivers on these platforms now, and they're very picky about what they want to do. And so I think that's a huge contributing factor to what's going on with the experience you had and others in terms of getting an Uber or a Lyft to somewhere. Look, these drivers would rather take a bag of fries and a burger somewhere than even someone as nice as Kevin Hinks.
Yeah, and I'm the nice one.
Andy and Kevin, I think that's a really interesting point, and one that maybe deserves some more unpacking. But Andy, as we kind of wrap this up, and let's just set Grubhub off to the side, one, because you said it's kind of a two-horse race, but we're also going to focus in on DoorDash in just a moment, and we're going to close out the show talking Uber. We know Uber's kind of this conglomerate. It's got the people moving, it's got the food moving, but just the experiences within the applications. All of these companies have tried to, basically get loyalty by offering you basically a prepaid service where you become a member, you lock in some prices that are a little bit more favorable, or even in some cases free delivery, so that you don't really even look at the other apps. You just focus on the one. But I also noticed, as you said, on something like DoorDash, you make your purchase, and it offers you, hey, you have 10 minutes to decide. We'll stop at Walgreens and pick you up a drink or something. When you do something like Uber, they're trying some interesting stuff too with pay a little bit more, you'll be first priority. We'll give you a little bit back if you want to wait a little bit. So it sounds like this disruption is happening in real time as these companies are trying different things. From what I'm seeing in your data right now, what Uber's trying doesn't seem to be working, or at least it's not taking hold in social media.
Yeah, I think that's right. But I think my overall message on this is, Kevin is exactly right. This space is a complete mess right now. There's a lot of labor problems and so on. But the technologies that have been established, the networks that have been established, the ability for these companies to scale is still very, very high and very good. And so I think it's a tough spot for the industry, but I do think that what they've built out is an extremely large moat around their businesses that's going to be tough for others to compete with and to attract drivers to. And so I think long-term, the outlook for the industry is really good. And I do like both of those companies, DoorDash and Uber, moving forward. I think both are in prime position to capitalize on a public that really likes things delivered to them more and more every day.
Mm-hmm. Well said. Andy Swan, the co-founder of LikeFolio.com. Let's leave it there.